Joining me now is Anderson Capital Management's Chief Investment Officer, Peter Anderson. Peter, good to see you. Thank you so much for being here. So are stocks being run by oil again?
Every tanker headline is certainly a price signal, Maria, and I think we will have to continue enduring that until this conflict is over. You know, one of the things I was thinking about is if World War II, for instance, had today's data flow and day traders, I believe we'd probably have the same volatility that we have today. So to put this in context, I don't think this conflict is any more aggressive than historic conflicts. It's just that the data flow is so rapid and there are so many day traders around that we are actually aggravating that kind of volatility, but we just have to live through that.
Yeah, it certainly feels that way, but you've got to believe that crude oil at $88.60 a barrel is a positive. I mean, we were talking about $100, but now it feels like these flare-ups over the weekend have added to the confusion, Peter. Energy Secretary Christopher Wright was on the Sunday shows over the weekend, and he was asked about gasoline prices and when they'll be back down below $3 a gallon. Here's what he said. Watch.
I don't know. That could happen later this year. That might not happen till next year. But prices have likely peaked, and they'll start going down. Certainly with a resolution of this conflict, you'll see prices go down. Prices across the board on energy prices will go down.
But it might not be under $3 a gallon until 2027.
Under $3 a gallon is pretty tremendous in an inflation-adjusted terms. We had that in the Trump administration, but we hadn't seen that in inflation-adjusted terms for quite a long time. We'll get back there for sure.
I mean, Peter, it's pretty silly to be asking, cabinet secretaries when gasoline prices will be below $3 a gallon. We all know this is supply and demand, Peter. But let me get your take on how you invest around these volatile moves.
Well, first off, I do think that the volatility isn't as great as expected, as most people are saying. And I think it's because something else must be going on these days, Maria. Instead of energy prices driving the markets and the economy, I think it's because there are other offsetting elements that are showing some bright light. So, for instance, finally, AI. And, I've been a skeptic of AI, but now I think that we are starting to see the benefits of AI in almost every type of company out there. And I think that might be somewhat buffering the volatility of oil prices. And people are not as concerned. I mean, certainly the airlines are because it's a major input cost to their business. But other businesses are finding ways to offset, I think, the higher energy prices. So I expect earnings period this time to have a lot of positive guidance about how AI will be adopted into their individual business practices.
Yeah, we've also got to talk about Kevin Warsh. Let's check interest rates this morning, which are also spiking. Kevin Warsh is facing a key Senate banking confirmation hearing tomorrow. He's expecting to be fielding questions on interest rates, inflation, the central bank's massive balance sheet, which is still above $6 trillion, by the way. Warsh is calling for a rollback of that footprint, with the hearing signaling how aggressively Fed policy could be shifting moving forward. Peter, last week, President Trump told me if Jay Powell does not move out of the chairman's spot by May 15th, the president will fire him. The president is expecting Kevin Warsh to move forward, but we've got questions about Senator Tom Tillis blocking the progression here. Your thoughts?
A lot of moving parts with that, almost a little bit like a soap opera at this point. But I would say this, that the Fed is concerned about two things right now, no matter who is in that chair. The first thing is rising energy prices, as you referenced. Is that going to be causing a lot of inflation? But then pushing against that are the efficiencies that AI will introduce into the markets. I mean, just let me give you an example. We ourselves just created our own research analyst driven by AI, an agent, for under $3,000. Imagine the margin improvement you can have with something like that, because now AI can actually reproduce and maybe even do better work than the traditional stock research analyst. So if I'm experiencing that, let's scale that to all other businesses.
You're right. We're talking about AI all morning this morning as we kick off our AI week. Michael Lee, jump in here on the Kevin Warsh situation as interest rates sit at 4.2% on the 10-year.
Yeah, so Kevin Warsh has made it clear that he wants lower interest rates, but at the same time, less Fed involvement in markets, which, really since Obamacare got announced and Bernanke stepped in to, juice the economy with quantitative easing, there's just been too much. You've manipulated markets. You've used the bond market to manipulate the S&P 500 to the economy. The Fed can't have this much control. I think, I don't know how it's going to play out, but in broad brushstrokes, I'd say that's a better idea to have lower short-term rates and less quantitative easing, less market manipulation. What say you?
Well, certainly. I mean, I think a longer-term perspective on this is much desired. However, there are so many moving parts now. I think the Iranian conflict will certainly overshadow their logic, and as they try to formulate going forward what the path of interest rates should be, there's just so many moving parts. And I do think that this earnings season will definitely play a major role in how they're looking at the path of interest rates and whether or not there's inflation or whether or not we're moving right along. I personally think that we're moving right along fine. I don't think that they should ever raise rates. And I'm predicting that they will probably keep rates stable for at least 3 more quarters until this thing is totally resolved.
Peter, you want to buy stocks here?
Maria, I'm always positive on certain aspects of stocks, and certainly, as I was saying before, I think that AI is now shining a bright light on the areas. Even companies like, United Rental Equipment, very positive now with AI.
We will leave it there. Peter, good to see you. Thank you. We'll be right back.